Hey everyone, welcome back to Corporate Decoder, the place where we sift through corporate filings so you don't have to. Today we are diving into PAVmed's preliminary proxy statement, which, let me tell you, is about as exciting as watching paint dry, except maybe there's a slight chance the paint will reveal a hidden treasure map. But seriously, this document is about an upcoming shareholder meeting, and we are here to decode what they'll be voting on. Scroll Washington DC CAF 2004 Forsti Mint for all Fif or 4 for 9. In essence, needs its shareholders to say yes to a few key proposals that will shape their future. It's like asking for permission to keep doing what they are doing, but with a few added twists. So mark your calendars, stockholders, because June 18, 2025 is the big day. This is when shareholders will gather virtually to vote on some proposals that the board of directors thinks are important. First up, there is the election of 2 directors. They need to re-elect 2 members to their board. It's like a school election, but with higher stakes and probably less drama. Next, they are asking for permission to issue more stock. Specifically, they want the go-ahead to issue shares related to some pre-funded warrants they sold earlier this year. Think of warrants as options to buy stock at a later date. They also want to increase the number of shares available under their long-term incentive plan. This is basically their way of keeping employees happy, motivated, and invested in the company's success by giving them stock. Then, in an advisory vote, shareholders will get to weigh in on the compensation of the top executives. It's called a say-on-pay proposal. Finally, they need to ratify the appointment of their accountant, Markham LL, as their independent accounting firm. This is a standard procedure to ensure the books are being checked by someone trustworthy. The board of directors is urging everyone to vote for all these proposals. They believe it's all in the best interest of the company. Let's drill down into this share issuance proposal. Back in February of 2025, PAVmed did what's called a private placement, selling shares and warrants to some investors. Now, because the price of these shares was less than what Nasdaq, the stock exchange they are listed on, allows, and because the amount of shares potentially issued is significant, they need shareholder approval. They sold stock in PAVmed and as a sweetener threw in some stock from their subsidiary Veris Health. There are subscription agreements with the investors which include protections against future equity raises at lower prices, meaning if they later sell stock for cheaper, these initial investors get some extra stock to make up the difference. These investors also got the right to participate heavily in any future stock offerings, and PAVmed agreed to limit how much debt they take on until late 2026. It's like the investors getting a golden ticket. PAVmed says this was the best way to raise money for Veris to continue developing its implantable physiological monitor. It is a fancy way of saying they needed cash and this was their best option. If shareholders don't approve this proposal, PAVmed might have trouble satisfying the warrants, which could impact their ability to raise capital in the future. Basically, it's a bit of a financial pickle if this doesn't pass. Now, on to the request to increase the shares available under their 2014 long-term incentive equity plan. They want to add another 2.5 million shares, bringing the total to about 4.9 million. PAVmed says this is crucial for attracting and retaining talented employees. It's like saying, we need more carrots to dangle in front of our team. This plan lets them give stock options and other stock-based awards to employees, officers, directors, and even consultants. So it is not just for the top brass. The 2014 plan has a purpose. It's designed to give key people a stake in the company, aligning their interests with the shareholders. The 2014 plan allows for options, both the incentive kind that gets special tax treatment and the regular kind. The exercise price, what people pay to buy the stock, can't be less than the fair market value at the time of the grant. Assuming the 2014 plan proposal is approved, there will be an aggregate of 4,912,140 shares of company common stock available under the 2014 plan. With restricted stock, the employees don't get the actual stock certificates right away, and the company holds on to any dividends paid out until the shares fully vest. The employee has voting rights. If someone tries to take over the company without the board's approval, all outstanding stock options and awards will automatically vest. As of March, the executives, directors, and employees have only a little over 1 million options available. As of right now, the board has not decided who and how much will be available under this 2014 plan proposal, and that's up to the committee. But again, the board recommends you vote for this 2014 plan proposal. The proxy includes a say-on-pay proposal. This is basically a non-binding vote where shareholders get to express their opinion on how the top executives are being paid. They are asking shareholders to approve the compensation of the executives as disclosed in the proxy statement. The board believes the compensation aligns with the company's compensation policies. Unsurprisingly, the board wants everyone to vote for this too. It would be awkward if they didn't. Next is the matter of the accountants. The board has appointed Markham L as their independent accounting firm for the next fiscal year. Now they need the shareholders to say, yep, that sounds good to us. Markham has been their auditor since 2019, so they are not exactly strangers. The audit committee of the board has policies in place for pre-approving all the services provided by the accounting firm to ensure they remain independent. Markham's fees in 2024 totaled almost $700,000, which was below the $864,000 in 2023. And wouldn't you know it, the board recommends voting for this too. They haven't paid any cash dividends on the common stock yet, and they don't anticipate doing so anytime soon. It is mostly retaining earnings to grow the business, or at least that's the plan. Delaware law and the company's governing documents include measures that could make it harder for someone to acquire the company, possibly without the board's blessing. Their board is divided into 3 classes, so it would take more than one election to change the control of the board. PAVmed stock is listed on the Nasdaq Capital Market. The filing goes into detail about the folks running the show. It discusses the director and executive officers. The chairman and chief executive officer has a long history in the medical device world, both as a surgeon and an entrepreneur. The document also talks about Dennis McGrath, the president and chief financial officer, who brings a wealth of experience with mergers, acquisitions, and finance. Good news, no family affairs here. There are no family relationships among any of the company's directors or executive officers. The board has determined that several of their directors, including Mr. Glennon, Mr. Baxter, Mr. Sparks, and Ms. White, are independent as defined by Nasdaq rules. They have an audit committee which is responsible for things like reviewing financial statements and monitoring the independence of the auditors, among other things. The equity awards paid to each person listed are consistent with the director fees described herein above, including annual retainer and as a member and or chair of a committee of the board. Everyone filed their reports on time, so we can cross that off of the concerns. Regarding the ownership structure of PAVmed's common stock, Tasso Partners holds 15% and Ireton Capital LLC holds 7.1%. Starting with Dr. Lishana Clogg, Chairman and CEO Kent 2024, he made a total of $1,365,212,000 in stock awards. His salary was the same in 2023, but this year he made about $400,000 more overall. Dennis McGrath, the president and CFO, made $1,150 in 2024. Most of that came from his $663,000 salary, and then about $412,000 in stock awards. That's up from $673,500 the previous year. Sean O'Neill, the Chief Operating Officer, made just under $1,050,000 in 2024. The total amount for the compensation for this year increased drastically from $498,000 the previous year. Lastly, Michael Gordon, the General Counsel and Secretary, made $1,122,952 in 2024. This is almost double from his previous year's pay. This table shows how much these officers could potentially make if all their stock options and stock awards fully vest. It is a big number. The insider trading policy prohibits short-term trading, short sales transactions in derivatives of and hedging of the company's securities by its directors, executive officers, employees, and designated consultants, and prohibits pledging of the company's securities by them. The company intends to post on their website, as required by law, details about any changes or waivers to their ethical code. Lucid paid or accrued a total of approximately $11 for $3 million and $9 a million in the years ended December 31, 2024 and 2023, respectively, under the Management Services Agreement. On June 29, 2023, the company and Dr. Sundeep Agrawal, who became a director of the company effective September 10, 2024, entered into a strategic advisor agreement pursuant to which Dr. Agrawal provides strategic consulting, general advisory, and other services to the company. If you are a shareholder and want to propose something at the next meeting, you better get your notice in on time. It is a similar process if you want to nominate someone for the board. There is a deadline. All the correspondence, notices, and forms should be sent to the company's mailbox in New York If you share an address with another shareholder, your broker might be householding your proxy materials, meaning you are getting one set of documents. The company does not intend to bring before the annual meeting any matters other than those specified in the notice of the annual meeting. And if you have any questions, contact the company. And that's PAVmed's preliminary proxy statement decoded to scroll. X6-14 long-term incentive equity plan has had 6A amendments. In a nutshell, PAVmed wants shareholders to approve key proposals about electing directors, issuing stock, compensating executives, and choosing their accounting firm. It's all pretty standard stuff for a company at this stage, and the board is giving it their full support. On the positive side, PAVmed is laying the groundwork for future growth by focusing on retaining employees and getting a grip on its equity structure. A notable risk is that if shareholders fail to approve some of these measures, particularly the stock issuance, the company's financial flexibility could be limited. This requires the company to do more paperwork, which requires money. Overall, PAVmed is charting a course for future growth, which comes down to the shareholders and whether they are happy with the team running it. So it will be interesting to watch whether the plan will be successful. That's all for today, folks. If you found this helpful, be sure to like, comment, and subscribe. Let me know in the comments what companies you want us to decode next.